Controlling the oil market, Saudi Arabia pushes to freeze oil production. Russia says it's on board. But will the agreement hold? And how will we all be affected? This is Inside Story. Hello and welcome to the show. I'm Sami Zeidan. Well, it seems OPEC is trying to build up prices again and strengthen oil-producing economies. Some of the bloc's energy ministers met their Russian counterpart on Sunday. They want to see greater cooperation between OPEC and non-OPEC countries to stabilise the oil market. There was a time when striking oil was seen as figuratively striking gold, but the oil industry took a hit last year. Prices fell to an all-time low in January and are still around half the price they were at their peak 2 years ago. No wonder then OPEC is looking to review its strategy. The Saudi Minister of Energy is describing the meeting with Russia as successful.
All parties have reached consensus as of now, whether it is OPEC members or non-OPEC oil-producing countries such as Russia and also oil-consuming countries. All parties have agreed that the price recovery is good for the stability of the oil market. And the faster this process goes, the better. Confidence in the market needs to be rebuilt.
OPEC is expected to cut oil production before the end of the year, try and boost those prices. The bloc currently produces around 33 million barrels of oil every day. It's a huge percentage of the world oil market, but that's all of the OPEC countries together, of course. Russia on its own produces 1/3 of that, around 11 million barrels of oil a day. And the US produces slightly more, 13 million barrels a day, which is why it's so important that non-OPEC countries are brought into any discussion on regulating oil production around the globe. And then there's Iraq, which is part of OPEC, but says it can't afford to cut production right now. Iraq produces around 4.5 million barrels of oil a day. It's the fourth country after Iran, Libya and Nigeria to ask for an exemption. Let's bring in our guest to the show. We have in London Richard Mallinson, an oil analyst and partner at Energy Aspects Consultancy. And in Moscow, we have Mikhail Krutihin, an oil analyst and partner at RusEnergy Consulting. Good to have you with us. Let's start with Richard in London then. What exactly are OPEC members asking Russia to do at this point?
Well, the OPEC group has been working on its own deal to cut production below that 33 million barrels a day level that you mentioned in the introduction. That isn't finalised yet. They're still aiming to put that together by the 30th of November when they meet formally in Vienna and hopefully announce a deal, or they hope. What they want is to extend the deal or agreement to certain non-OPEC producers, primarily Russia, by including a bigger share of the world's production, so not just the production from OPEC countries, but Russia and maybe other non-OPEC producers. They can increase the impact of any deal and hopefully push the prices higher. So they're looking to shore up and to strengthen the deal that they're currently working on.
But when we say, Richard, forgive me for jumping in, when we say shore up and strengthen, are they asking Russia to freeze its output or to actually cut its output?
Well, this is one of a number of ambiguities. What I think is it's not realistic to look for Russia to cut production. I think a freeze might be possible. We got a signal from President Putin in Istanbul in early October that Russia might be open to a freeze in its production as part of a deal where OPEC members cut. So I think that's probably the maximum that we can see reached.
All right, let's get the view then from Russia, talking about Russia. Let's head over to Mikhail. What sort of commitment do you think, when you read Russian policy, what sort of a commitment do you think they'll be willing to give to OPEC countries?
I guess we should treat declarations of the Russian energy minister with a grain of salt. Because, well, even history shows when Russia promised OPEC to cut down production, it happened in the year 2000. And every month, Russia announced that it was decreasing production by about 150,000 barrels per day. By the end of the year, it turned out that Russia actually increased production to the amount of 150,000 barrels per day. So now, when we hear the Russian energy minister promising to demonstrate some solidarity with OPEC members, we should consider the very simple fact. The Russian energy ministry has absolutely
if you forgive me, Mikhail, is it any different this time, though, because low oil prices are hurting Russia's ability to earn more cash on the barrel of oil?
No, I don't think so. Russia is earning much less cash than it used to earn before. But the Russian ministry has no leverage over oil companies. It cannot regulate the level of production, consumption, and exports. There is just no instruments at the hands of the ministry to do that. The companies do what they want to do, and it is impossible to regulate it very quickly. In addition, it would be very difficult to cut production in Russia because most of production comes from Arctic areas, and if you close down an oil well there, in a couple of days there will be a big plug of congealed oil in the well, and to rehabilitate that well, you will have to drill another one in the vicinity. It's a very costly instrument to handle.
Mikhail makes some good points there, Richard. What do you think OPEC countries are thinking? This can't be lost on them. They know the history of oil production, especially Russian oil production.
Well, Mikhail's absolutely right that the history of Russia adhering to its promises to cut production in the past isn't very good. And so I think that's the first reason that they're probably at most looking for a freeze, as I say, not an actual cut in production. But I think the other point is that for OPEC, getting Russia on board would be a big positive, but it's not central. The OPEC group already met in Algiers in late September, and there signalled that it was going to work towards a deal within itself for a cut in production, and on top of that try and get non-OPEC members on board. So I think even if Russia ends up not actually following through on commitments to freeze, that doesn't mean that OPEC can't at least attempt a deal itself. And then the last thing I'd say is there are some signs that, firstly, on a technical basis, some Russian fields may have a little more flexibility than in the past. I think Mikhail's absolutely right. A lot of the Arctic fields, you can't bring down or halt production without some very costly consequences. But some other areas that may be not quite the same now. And I think there are some levers or some potential around taxes on the Russian companies that the Kremlin may be exploring as a way to try and get some cooperation or participation from both the oil companies and some of the gas companies in Russia if it does decide that it wants to go ahead and at least freeze production. So they are all hurdles, they're all things that need to be worked through, but I think with OPEC focusing primarily on a deal within itself and with the indications from the very top of the Russian political establishment that Russia wants to support these efforts, we shouldn't write it off just yet.
The other point, Mikhail, do you think there's some value in getting Russia even symbolically on board, even to make a pledge if it's not able to meet it? Does it have a psychological impact on the market, on oil prices, when a big producer like Russia says we're on board with OPEC? You know, by the time they come to the end of the year to discover what the real Russian production has been, it may have already had some impact.
Yes, we have been hearing such declarations on the Russian part since March, when first the Minister of Energy, Mr. Alexander Novak, said that he had reached agreement with some of OPEC and non-OPEC members to freeze production, and he even quoted a figure: 71% of global oil production would be in control of those countries that agree to the freeze. But then even the Russian president, Mr. Vladimir Putin, was skeptical about that. When he turned, it was on the screen of Russian TV sets, when he turned to the minister and said, "Take a look at our minister. He has already persuaded the whole world to freeze production." I don't think it is realistic to expect anything practical. Yes, we have heard such verbal method of influencing the market since March. But yes, they made some effect on the paper market of oil. But actually, the prices of physical oil in tankers, in pipelines, have not changed very much. When we hear about $51 or $53 per barrel, in fact, Russia gains about $45 or $47 in the physical trade of oil.
Right.
So yes, it is good for the paper market, but not for the physical one.
Okay, Richard, I wonder, you mentioned this point, a deal needs to be worked out amongst OPEC members first before they are able to really impact the market and get non-OPEC countries on board. Can they get a deal together? There's already a list of countries asking for an exemption: Iran, Iraq, Libya, Nigeria.
That's absolutely true, and I think it would be foolish to think at this stage that a deal is done. There is, however, a couple of important distinctions from where we were in March, April, when we were building up to the previous round of talks in Doha, and where we are at the moment as we head into the 30th of November meeting. The first of those is that back in March and April, Iran was very unwilling to countenance any form of limit or restriction on. It was just in the process of ramping up its supply after sanctions were lifted. In fact, the Iranian oil minister didn't even turn up to the talks in April. This time round, we're seeing more openness from Iran. It has achieved that ramp up. Production has been plateauing in recent months, and even just earlier today, we heard the deputy oil minister saying that Tehran was open to working with other members. There's still some detail to be worked out about exactly what level Iranian production could reach, but I think there's a lot of progress being made there, which was one of the big sticking points previously. The second thing is, if we look at the Saudi Arabian attitude, I think at the beginning of the year, even into March and April, they were certainly open to cooperating with other OPEC members, but they wanted the rest of the group to do the work. They wanted to see all of the other members, in particular Iran, coming to the table and willing to participate. And Saudi Arabia took quite a hands-off approach. This time round, I think we're seeing a lot more proactivity from Riyadh. There's a lot more willingness to try and push ahead and achieve this. So those two are important changes. What I think we still need to deal with and cope with is Iraq's position, which is proving more and more difficult. Baghdad is saying that it doesn't even accept the baseline that the other OPEC members want to use as a starting point for measuring any freeze or cut in production. And of course, as you mentioned, the exemptions on Libya and Nigeria.
I wonder, Mikhail, can OPEC really control the market without Libya, Iran, Iraq, Nigeria on board? You know, with the Russian position, as you said, we should be a little bit skeptical. I mean, prices already fell after Iraq said, you know, it wants to stick to its exemption situation. You know, can it really control the market?
Well, yes, well, I'm skeptical about that as well. Because, well, experience shows that members of OPEC are not prepared to obey to the declarations they issue at their meetings. And I believe that none of the members of the organization is ready to make concessions and sacrifice its share of the market to any other country. And besides, I think we are forgetting about non-OPEC producers of oil from Mexico to Norway, and most important, the United States. We are sure that those countries are not going to obey whatever declarations are made by OPEC and such allies of OPEC as Russia, and they are going to increase production, not decrease production, and occupy whatever niches on the market get non-occupied as a result of some freezes or suspensions of production.
Richard, what sort of price do you think OPEC wants to see oil settle at or rise to, shall we say?
I think in the near term, Certain countries are looking for at least $55, $60 a barrel in the global market. But when you look at budgets of OPEC producers, the GCC states, but also countries like Venezuela, Libya, Nigeria, they all need prices much higher than that to cover their social spending, their government spending as a whole. And so I think the group is probably looking for something $70, $80 a barrel over the medium term.
Do you think that's
even
achievable?
With the efforts to... I think it is, because I think non-OPEC supply is the important part here. But if we look outside of the US, then we see that the costs of producing oil from most of the non-OPEC region have risen. Those prices are they've deflated slightly in the last couple of years because of less activity, but the reality is most of the easy, cheap to extract oil outside of OPEC is behind us. And if we want to meet rising global demand, even with additional OPEC production, we also need non-OPEC growth. And the only way to stimulate the kinds of investment to deliver that oil over the medium term towards the end of this decade and beyond is, I think, going to be with prices in that $70, $80 a barrel range.
What do you think, Mikhail? $70 a barrel, I think, is what Richard said in the medium term. Is that do you think that's an achievable goal in the medium term?
Well, I think it is a possibility to see $70 per barrel maybe in about 3 or 4 years. But for the next year, I cannot envision anything larger than $45 per barrel as the median line of a very narrow corridor.
What would that mean, Richard, for the world economy if oil prices start to rise again?
Well, certainly oil-consuming economies around the world, the developing countries like India and many of the Southeast Asian nations, but also developed economies that are net importers, such as the European countries, we're all benefiting from low prices. It's giving a boost to what is quite an anemic global growth picture. It's keeping inflation under control. As prices start to rise, we may see some of that, the demand growth that's been stimulated by low prices being dampened. But I think a lot of what we're seeing around the world is structural growth. It's about expanding populations, it's about growing middle classes, it's about people buying their first vehicles, traveling by airplane for the first time or more regularly.
But for the average consumer in those countries, are they going to see money out their pockets? What's the bottom line for people, for viewers watching this show?
Yeah, absolutely. If you are in a country where oil prices are market linked rather than subsidized or regulated, then they're likely to be rising through next year and into 2018. And so the couple of years of very cheap petrol, gasoline, diesel that we've had, I think are going to be behind us quite quickly.
Is it better news, Mikhail, for those in oil-producing countries? Will a rise? Is that going to help deliver some of the oil-producing countries from some of the budget problems they have? Not just Russia, Gulf countries, Venezuela, and so on and so forth.
Yes, I think the effect might be different for different countries. For Russia, Russian companies are going to pursue the current tactics. They are producing as much as possible of the remaining cheap oil, and they are disregarding the projects when production costs are very high. It means that after the year 2020, Russian oil production is going to start falling down because of depletion of brownfield projects. As to basically I would look on the supply side mostly to the United States, where the shale companies are prospering when prices are higher than 55 or 60. And on the demand side, the only country that I would be watching is China. This is a very great uncertainty.
Richard, has OPEC secured its market share, which we understand was at least one of the reasons why OPEC countries had aimed for low oil prices and increasing production? Has that been secured, or is this some OPEC countries saying the cost of low oil prices is too much to bear, let's bail on this policy?
I don't think this is OPEC, and in particular Saudi Arabia, abandoning the policy they set out on in 2014. What we've seen is that a period of low prices has decimated investment in the most costly projects, the kind that Mikhail just mentioned, around the world. And that is opening up market share and space for OPEC producers. One of the reasons that it's taken longer for the market to tighten up and prices to rise than OPEC initially expected back in 2014 is because several of those OPEC members have been raising their production. So Iran coming back after sanctions, Iraq had a very successful year in 2015, and Saudi Arabia hit record production levels this summer. So all of that extra oil coming out of OPEC has meant that the market has stayed well supplied and kept prices lower for longer. But at the same time, it's meant that OPEC's market share as a group has been on the rise, while non-OPEC supplies are falling, and so that market share is declining. So I think the trade-off is really between simply pursuing more market share and pursuing a combination of a healthy market share and higher prices. And I do think when it comes to the 30th of November, the group is going to do its best to get into that latter position.
Let's shift the discussion a little bit into politics. Mikhail, do you see this meeting between some of the GCC countries and Russia as part of a perhaps bigger diplomatic rapprochement?
Well, I think diplomatically, on the verbal side of the affair, yes, it makes some effect. There could be some declarations of coordination of efforts or some solidarity, but when the market wakes up and sees that it has no practical meaning, I believe that in a week or two after such declarations, the prices will return to the natural level, which is determined by the balance of supply and demand.
Richard, what do you think? Can we expect any convergence on other issues between GCC countries and Russia?
I think these talks are very much focused on the oil issues. I think there's a lot of consensus, or at least a common interest, between Russia and the GCC states in terms of getting higher prices and rebalancing the global market. I think there are a whole raft of other issues that the two sides might need to talk about, not least policy over Syria and Russia's more general attempts to increase its influence throughout the Middle East. But I don't think those will have been on the agenda, and I don't think that any agreement over oil production is about a quid pro quo in those other areas. I think it very much is that the two sides would both like the same thing, which is to achieve a higher, more balanced market price.
All right, perhaps not a quid pro quo. Mikhail, do you see that this could perhaps facilitate convergence between some of the major Arab Sunni oil-producing countries and Russia on other issues? Or we've already seen that convergence that many didn't expect between Turkey and Russia.
Well, unfortunately, I remain pessimistic about that. Yes, there is some opportunity for convergence on political issues, but not on Syria, because Russia is basically against the international coalition of about 67 countries that are fighting in Syria, and Russia is fighting on the other side, supporting President Assad, but not the international coalition. I believe there are some other fields of cooperation which are still possible. For example, when the Russian minister talks to his Saudi counterpart, when he talked during the last visit, it was about technical cooperation, and I believe it is possible to cooperate in such fields as nuclear energy, but not oil and gas, for example.
All right, gentlemen, we'll have to end it there. It's an interesting topic, of course. We can go on this one for a while. The oil, the economy, linked to everything, isn't it, nowadays? But for now, let's thank our guests. We'll leave the discussion to continue in another show. Richard Mallinson in London, Mikhail Krutihin, thank you very much for joining us on this episode of Inside Story. And thank you too for joining us. You can see the show again anytime by visiting our website. All of it there for you at aljazeera.com is the address. And if you want to have further discussion, of course, you can also head over to our Facebook page. The address there for you, facebook.com/AJ Inside Story. Let's not forget, you can also join the conversation on Twitter. Our handle there is @AJ Inside Story. Well, from me, Sami, Zeidan, and the whole team here at Inside Story. For now, thanks for watching and goodbye.